I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Here's a check of your first word news. The French president spoke addressing a joint meeting of Congress today. President Emmanuel Macron warned that a trade war would be especially damaging to the middle class.
A commercial war opposing allies is not consistent with our mission, with our history, with our current commitments for global security. At the end of the day, it will destroy jobs, increase prices, and the middle class will have to pay for it.
President Trump's travel ban drew support from key Supreme Court justices today. The policy indefinitely bars more than 150 million people from entering the country. The court will likely issue its ruling in June. Senate Democrats have released a summary containing allegations of improper conduct by Ronnie Jackson, the president's pick to lead the Veterans Department. One allegation says he got intoxicated at a Secret Service party and wrecked a government car. And former President George H.W. Bush is out of intensive care. Doctors say he's also alert and talking. The former president had been in the hospital since Sunday, the day after his wife's funeral. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti, and this is Bloomberg.
And this is Bloomberg Technology. Coming up, Facebook crushes on revenue and continues to add new users. We put the earnings report in focus after one of the most challenging quarters at the world's biggest social media company. Plus, Twitter's turnaround gathers steam, but why aren't investors buying it? We'll hear from CFO Ned Siegel this hour. And Tim Cook's face-to-face with President Trump, details on the Apple CEO's trip to the White House and its potential impact on trade tension with China. But first, to our lead. Facebook shares advancing in late trading after reporting first quarter earnings. A big quarter for the social network. Ad sales near records and users keep flocking there. Facebook's first quarter revenue soared almost 50% to $11.97 billion, beating analyst estimates. In a statement Wednesday, Facebook said it now has 1.45 billion daily users, which is a key measure of engagement, matching estimates. This, of course, as Facebook is embroiled in one controversy after another. We are joined now by Techonomy CEO and our Bloomberg contributing editor, David Kirkpatrick. And in Seattle, we have eMarketer analyst Deborah Aho Williamson. So, Deborah, the Cambridge Analytica scandal broke towards the end of the quarter. So maybe that's not all included here, the impact of that. But what do these numbers signal to you?
You're absolutely right. The scandal happened, or the revelations happened so late in the quarter that any impact will likely happen in Q2, if it does at all. This quarter's earnings looked strong. The revenue looked strong. User growth looked strong. There's a lot of positive things that happened in the quarter. We're finding it hard to find much negative at this point.
Obviously some remains to be seen, but there are analysts like Mark Mahaney of RBC Capital Markets who told us he thinks this is really a blip. And today he said that Facebook will continue to have long runway. David, would you agree?
It's a tough thing to answer in the same language that Mark Mahaney would use. I do think that we're going to see advertisers essentially having no choice but to use Facebook for the most exact targeting they can get anywhere on a global basis. That's a huge asset for the company. On the other hand, this company is in a absolutely unique new position where its very legitimacy is being questioned by society and governments around the world. I don't think it's really possible to predict how the company ends up having to adapt to that and what its profit and revenue implications could be and advertising implications. So I think we are entering a very new phase for this company, which impressively continues to hit on all cylinders financially, but it is by no means out of the woods. This company is in a position no company's ever been in before, and it might get bad.
I sat down with Sheryl Sandberg a couple of weeks ago to talk about this controversy. She apologized for it, and she also said that they never have run the company for short-term profitability, and yet we are seeing these numbers. Deborah, what do you think the impact will be on the current quarter? How are you building your models?
We are watching user engagement really closely. It seems like Facebook is always able to increase the total monthly user base, but we're watching for any sign that there is reduced engagement in terms of time spent on Facebook or the activity that people do there. We're also watching for any signs that advertisers will have less access to targeting capabilities. We see Facebook rolling back certain things that advertisers used to be able to do in terms of targeting. It remains to be seen whether advertisers will continue to use Facebook in other ways and establish new ways of using it. Those are kinds of things that I think we're paying attention to. I think David's exactly right that this is a time where there's a lot of question about Facebook. Q2 is probably going to give us a lot more information about exactly how Facebook is addressing some of these issues than we saw in today's earnings from Q1.
Mark Zuckerberg is speaking on the call now. He started off addressing the controversy off the top. It's clear we didn't do enough. Also promising to get things in order in time for the U.S. midterm elections. Until now, he's really sort of couched it, saying it's an arms race, but that they would try to. He's saying they will be ready for the U.S. midterm elections, on the hopes that something like this won't happen again. David, talk a little bit about, impending regulation and how all of that could impact Facebook over the much longer term.
Well, every government pretty much in the world is considering whether or how they should regulate Facebook. And since they operate in somewhere around 190 countries, that's a huge overhead of management for them they're going to have to deal with. I also think there is a bigger trend, which Deborah might have some thoughts on, which is that I think it's possible that consumer attitudes about targeting to them could be changing, at least in the developed countries. I don't think there's a lot of signs that that's a concern in the countries where Facebook's growth is the greatest in the developing world. But if that were to happen, I think there's just so many variables that are so hard to predict. It's lucky for Facebook in a sense that they're so phenomenally profitable. But they are a company in a position like no other has ever been. Their profitability is like no other company's ever been. They have slightly under $12 billion in revenue, and they have about $5 billion of that is net profit. I mean, that is a phenomenal profitability. They have so many things about them that could not be said about any company before: their scale, their global footprint, their profitability, the degree to which one person controls it, their impact on politics, their impact on the public square in every country, their impact on media. This is a very unprecedented position for a commercial company to be in, and the world is finally realizing it, which means a lot of weird things could happen going forward, and regulation is one of them.
Zuckerberg on the call saying we have a responsibility to keep moving forward and keep building tools that bring people together in new ways. He's re-emphasizing the new-ish focus on meaningful interaction, not just interaction. Deborah, do you think that change in focus will impact engagement, as they, essentially make this shift back towards, a focus on more sort of personal updates rather than news updates, and have to make some potentially tough compromises?
Yeah, absolutely. I think the focus on engagement is a really strong one and a really appropriate one for Facebook right now. I really believe that consumers do have some concerns, as David alluded to, about ad targeting, about how their information is being used, about how Facebook is targeting them, and if it's sharing data about them with other people or other entities. Those are all questions that consumers have, and that could have an impact on their engagement, their likelihood to use Facebook. They might change their privacy settings. They might decide to share less information. They might think twice about about the kinds of things that they do on Facebook. These are all things that could happen. We haven't seen it yet. We saw surveys in the course of Q1 that were done after Cambridge Analytica that said, hey, consumers, we're more serious, or we're thinking more about our privacy about Facebook than we used to. But the proof is going to be if people actually do make any changes. And in situations in the past, we have not necessarily seen a lot of people leaving Facebook due to other concerns that the company has faced.
All right, and let's not forget, Facebook also has Instagram, Facebook Messenger, WhatsApp. He's now talking on the call about WhatsApp. 3 million people using WhatsApp to interact with businesses, which is a new capability. Deborah Aho-Williamson of eMarketer, Techonomy CEO David Kirkpatrick, thank you as always, both of you, for weighing in. And the earnings roundup continues. Qualcomm reporting its second quarter with adjusted revenue of $5.23 billion, beating analyst estimates. Its results seem to indicate China's smartphone market is improving. Meantime, eBay had net revenue of $2.58 billion and earnings per share of 53 cents. eBay's former subsidiary PayPal beat estimates with net revenue hitting $3.7 billion and earnings per share of 57 cents also beat estimates. We're going to have more on PayPal earnings later this hour. Coming up, we'll speak with Twitter CFO Ned Siegel after shares sink despite strong earnings results. He opens up about everything from regulation to the president's Twitter habit. Didi Chuxing has replaced the CEO of Brazilian ride-hailing app 99 Taxis with one of its own executives. This according to a report in Recode. Tony Chi will take the helm of the startup. He was previously a general manager at Didi and ran the company's luxury business. Didi bought 99 Taxis back in January, gaining a foothold in Latin America and broadening its global war with Uber. Well, Twitter smashed estimates for first quarter sales and profit as its push into live video and more personalized content starts to pay off. Revenue jumped 21% to nearly $665 million. Monthly active users rose to 336 million, but shares fell on warnings that growth will slow this year. We caught up with Twitter Chief Financial Officer Ned Siegel about the results. Take a listen.
We had a great quarter. We were thrilled with the outcome. Double-digit DAU growth for the sixth quarter in a row. We accelerated our revenue growth. We grew revenues 27% when you remove the telepart part of the business, and we were EBITDA and GAAP profitable. So we were thrilled with the outcome of the quarter. It gives us the opportunity to go back to the areas where we've been investing, which is the health of the platform, audience and engagement growth, the revenue products that the advertisers use, and sales. And we'll be investing in all those over the course of this year. We said on the call that we'd grow headcount 10 to 15% this year. It's really focused on those priorities.
Now, despite this, shares are down. Why do you think that is?
You know, I try hard not to look at the stock from one day to another. We're trying to build a Twitter that everybody in the world can benefit from, and that requires taking a long-term approach. We're just trying hard to put up good results, and we know that over time the market will reflect it. Now,
you did say it'll be difficult to grow at the same rate in the second half of the year. Why are the expectations more muted?
You know, we gave EBITDA and EBITDA margin guidance for the second quarter. We also tried to help people think about the full year and just reminding them that the comps are harder in the second half of the year because we start to lap the business recovery that began in the third quarter of last year. So we'll talk about the second half of the year when we get there. We feel really good about the momentum in the business, about advertiser sentiment, just the pace and feeling on the floor at Twitter feels so much better than it did when I started 8 months ago. So we feel really good about things right now.
Everybody is wondering how these increased, concerns around data privacy and regulation will impact you. GDPR, for example, tighter privacy restrictions in Europe. How will that impact Twitter's business and bottom line?
So it's too early to predict how it affects us from a revenue perspective. The regulations don't come into effect until late May, and so we'll be watching closely. One of the great things about our business is it tends to be very brand focused, and brand advertising may be less impacted than some other types of advertising are. We just rolled out our new privacy policy around the world yesterday, and we view privacy as a right that we all have, and it's important to us to communicate clearly with our users users about how their data will be used on Twitter. And I'll just remind you, everything that happens on Twitter is public. And that's one of the great things about the platform. It means that, the APIs that we give people access to are just helping people organize the data in a different way than they otherwise might. There isn't anything in there that you couldn't find on Twitter yourself.
Our users or advertisers are leaving Facebook and spending more time on Twitter?
I don't know what's happening there. I can tell you that what's happening at Twitter is, it feels like it really is directly tied to the hard work that we're putting into the platform and into our relationship with advertisers.
So Mark Zuckerberg has expressed support for more regulation. Is that something that Twitter supports? And if so, what kind?
We're definitely open to regulation. A lot of the things that people are talking about from a regulatory perspective are about making sure that users know how their data is used. They're about making sure that we're clear with people, and those are things that we definitely believe in at Twitter.
So more hearings potentially in Congress. Will Twitter testify again if invited?
We're always open to conversations that can further the dialogue and help us figure out the best way to help users understand how their data is used.
Let's talk about what's happening around the world. Twitter's international growth was strong, but it was weaker domestically. How long will that balance continue?
Well, if you think about how our business started in the United States and then grew from there, we have a larger base of business in the U.S. than we do internationally. So there are more net new opportunities, such as the China export market or some of the strength that we saw in Brazil this past quarter. International grew 53%. The U.S., when you back out a business that we shut down last year called Telepart, it actually grew 9%. So we feel really good about the momentum in the United States, but it's growing off of a larger base, and it definitely has turned a little slower than the rest of the business has.
Do you have a game plan if President Trump, who is notoriously unpredictable, suddenly stops tweeting?
You know, we think about our platform as so much more than any one user. There's so much great stuff that's happening on the platform. It's the place where people go to find out what's happening in the world. It's where they go to be a part of that conversation. We're thrilled that it's a place where people go to break news as well, whether it's around politics or sports. I noticed as a San Franciscan, Bruce Bochy just came on Twitter for the first time last night after the Giants game. So we see new people on Twitter all the time, and we're thrilled that it's the place where so much is happening.
But is there any way to quantify how much traffic Trump is driving? Whether it's him himself or people following him or the conversation around it?
At the same time as he's been more active, so much has happened on the platform. It's hard to unpack any one event or user and attribute much to them. We've made so many improvements to the product. We have done so much to make the experience better, whether it's around onboarding or the timeline experience that you and I have, or the notifications that people get, or a more events and topics-driven approach that we've taken over the last couple quarters.
Now, we as journalists always hear chatter about Twitter getting bought. Whether it's real or rumor, how should we digest that?
We think about the opportunity that we have in front of us, and we're so excited about it. We feel like there's so much that we can do at Twitter on our own to prosecute the opportunity in front of us. Everybody in the world ought to be able to benefit from what's happening on Twitter, and right now we've got 336 million monthly active users, so we've got a lot of work to do to solve that, and that's really what we go to work thinking about every day.
So no plans to change being an independent company?
We're a public company, so our board has a fiduciary right, but when we're thinking about what we come in and gets us excited to be at work every day, we think about the opportunity to get Twitter in everybody's hands as quickly as we can.
Now, on the call, Jack Dorsey said, we are not a social network. What does he mean by that?
We're an interest network. We're a place where people go to find out about the things that they care about. They may care about certain people and what they're saying about important topics, but people often go because they want to find out what's happening in a game. They want to find out what happened in the stock market. They want to find out what's happening around a particular thing that's important to them. And so that means that although it is social in nature, it's not about the people to whom you are connected. It's about the topics and events that you care about.
Some of my conversation there with Twitter's CFO, Ned Siegel. By the way, Bloomberg LP produces a global breaking news video network for Twitter. Coming up, Apple CEO Tim Cook meets one-on-one with President Trump after Tuesday's state dinner. We will tell you what was discussed behind closed doors. This is Bloomberg. Our top story, Facebook out with a big beat. CEO Mark Zuckerberg just wrapped up speaking on the call. His main message, We need to keep moving forward. This is slightly different than the message to users and Congress, to whom Facebook stressed how careful it would be. But investors need to hear they will get more of the same from the social network as opposed to lots of volatility. Facebook CFO Dave Wehner just starting to speak on the call now. And Apple CEO Tim Cook made his way to the Oval Office Wednesday to meet with President Trump. The head-to-head comes amid a brewing trade war between D.C. and Beijing. Now, the president has long been vocal about Apple, saying during his campaign that he would get Apple to, quote, build their damn computers and things in this country instead of other countries. And before the meeting, he tweeted, looking forward to my meeting with Tim Cook of Apple. We will be talking about many things, including how the U.S. has been treated unfairly for many years by many countries on trade. Here to tell us what went down, Bloomberg's White House editor, Mike Dorning. So, Mike, what do we know about what was discussed behind closed doors?
We know the topic of what was discussed, and we know what both men think about that. It was about trade. And, of course, for Apple, it's very important to have open trade, especially with Asia. And President Trump wants a more limited so-called fair trade. But the White House and Apple haven't told us so much about what was said. We know that Cook met with the president in the Oval Office, and we know he also met with the president's chief economic advisor, Larry Kudlow, and that he also had a meeting in the office of the U.S. Trade Representative. So clearly very focused on trade.
Obviously, the president has decided to pursue tariffs on Chinese goods, which could disproportionately hurt Apple, given how many of its products are manufactured in China. Do you think there's any chance that Tim Cook could influence the president in the opposite direction?
I think there's a real chance that it has some influence on the president, maybe not enough to persuade him absent other things, but that he does listen to and admire successful CEOs, maybe more so than academics or other politicians. So he does value those people's opinions. And he has had a conversation with Cook before. And in fact, after the tax break, which Cook praised and which Apple benefited enormously from, Apple talked about building more facilities in the U.S. and having a fourth headquarters here in a new location in the United States, and Trump was very happy with that and sort of repeated that and praised that. So there's a rapport there, at least a working relationship, and this category of person, the high-powered CEO, is someone that Trump admires. Maybe not enough to stop him, though.
All right. Mike Dornan, Bloomberg News in Washington, D.C. We understand Tim Cook also met with Trump's top economic advisor, Larry Kudlow. We'll bring you any more headlines from those meetings as we have them. Coming up, we'll continue to monitor Facebook's first quarterly earnings call. Zuckerberg and Sandberg have given their opening remarks. CFO Dave Wehner on the call now, saying there's certainly the potential for some impact from GDPR, new European privacy regulations. He said it's hard to pinpoint impact beyond Europe. We'll discuss more next. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Here's a check of your first word news. French President Emmanuel Macron addressed a joint meeting of Congress today as he continues his state visit to the United States.
Today, the international community needs to step up our game and build the 21st century world order based on the perennial principles we established together after World War II.
Senators Jeanine Shaheen and Sheldon Whitehouse sent a letter to 8 banks last week asking for information on services provided to the Kremlin-connected oligarchs identified by the Treasury Department. The Wall Street Journal says they are looking into how the U.S. and international finance systems can be exploited by people sanctioned by the United States. A global chemical weapons watchdog says its team of inspectors has visited the Syrian town of Douma again. The town was hit by an alleged chemical attack earlier this month. The Organization for the Prohibition of Chemical Weapons says collected samples will be sent to its labs for analysis. South Korea has released video footage of the venue for the Inter-Korean Summit, where President Moon Jae-in and North Korean leader Kim Jong-un are expected to meet. Kim and Moon are to meet at the Korean border village of Panmunjom on Friday. Global News 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. Just after 5:30 p.m. here in Washington, 7:30 now Thursday morning in Sydney, where we are joined by Bloomberg's Paul Allen, who has a look at the markets. Paul, good morning to you.
Yeah, good morning, Lisa. Better lead today from the US. We've got the S&P up 1/5%, the Dow up 1/4%, that index snapping 5 days of declines. A strong result from Boeing restoring confidence in the industrial outlook. The Nasdaq looking kind of flat, though. We've got a beat from Twitter and a good result from Facebook as well, as you've been hearing. Take a look at what it all means for this part of the world. We've got ASX futures up about 0.6%, trading here in Australia, resuming after yesterday's public holiday. The Nikkei also up just over 1%. The Aussie and the Japanese yen both weakening on a stronger greenback. Checking on commodities, aluminium snapping 4-day losing streak. Norsk Hydro is warning of chronic shortages of alumina. Oil hovering around $68. Gold weakening a little. Plenty more happening in Asia today as well. We've got earnings from Nintendo, Sharp and Samsung, and South Korean first quarter GDP also due to be released. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. Back to our top story. Facebook out with its first quarter earnings, shares up over 6% in late trading. The social network reporting first quarter revenue of $11.97 billion, beating estimates on ad gains. Daily active users and monthly active users met estimates. Important to note, though, the numbers don't say anything really about Facebook post Cambridge Analytica, because that happened at the very end of the quarter. Facebook hasn't disclosed anything on engagement in the release. That was down in the preceding quarter. Joining us now to dig deeper on this report, Bloomberg Caroline Hyde, live in London, and with me here in San Francisco, Bloomberg Technology Senior Executive Editor Tom Giles. And interesting, Dave Wehner, the CFO, on the call, just now being asked about time spent and whether it can grow again. And he said flatly, we're not optimizing the business on time spent. So no answer there.
Well, remember, they talked in January about this idea that they're going to change the way they put information into the news feed. They want quality engagement. They don't want to fill our news feed with junk, with stuff that people don't care about.
He says Zuckerberg is focusing on connections over consumption.
That's right. And so this kind of passive viewing of videos, which, by the way, I actually kind of like some of the recipe videos myself. I didn't mind that so much. But apparently a lot of other people do.
Your dinner game has gone way up over the last few months.
And Facebook wants to kind of do away with those. So that is going to change the way we interact with it. We're going to spend less passive time. But if they have their way, we're going to have much more quality time. We're going to be doing things that we want to do.
He also just said Instagram engagement, though, is growing nicely. Caroline, also some comments from Dave Wehner about GDPR, saying it will have an impact or some impact.
Some impact, not significant impact, but I think this is notable. This is what investors wanted to be hearing. Will the new tougher regulations that are coming into play in Europe come May the 25th affect the business model in any way? Because we're going to have far more control over our data here in Europe. And he's saying, yes, it will actually affect the growth in terms of monthly active users, in terms of daily active users, both which were up in the first quarter, I might add, here in Europe. They will be affected in the second quarter, so they say, and notably that they might see overall some impact to the business, but not significant impact. And he also says, look, judge us compared to our competitors. We're not the only ones that could be affected by this. He's therefore saying, hint, hint, look at Twitter, look at Google, look at the advertising spend there, because it won't just be us.
Zuckerberg also saying that the focus this year is really to keep people safe. You know, that said, the ad business is still going gangbusters, and we know that, you know, this Cambridge Analytica scandal really exploded at the end of the quarter, so maybe we'll see a bigger impact next quarter, Tom. But, what are the things we're really going to be watching over the next 3 months?
Yeah, definitely looking for user engagement. Is there any, and are people leaving in any significant numbers? We might have seen a little bit of drop off, because it happened in a sufficient time that where there could have been some impact, though it wasn't material in that period. I would think it really behooves Mark Zuckerberg and Sheryl Sandberg to signal to the market if they're starting to see something. It really behooves them to do that. They're not saying that so far. My hunch is if they were starting to see it, they would kind of give a warning. They would have to give some kind of a signal that people are starting to pull back from Facebook. On the advertising side, the question I have is, where else are you going to go? If you want to reach people in mass numbers, where do you go? What are the other platforms? We talk a lot about duopoly in terms of digital advertising, and it's really about Google and it's about Facebook. So if you're an advertiser, even if you have misgivings about privacy and what they're doing with user data, where else are you going to go?
Right. And when I spoke with Sheryl Sandberg a couple of weeks ago, she said a few advertisers have paused their spending. She also said this. Take a listen. All right, Sheryl Sandberg, when I asked her about whether or not advertisers would be impacted by this, she said a few advertisers had paused their spending, and she also said that they never have run the company for short-term profitability. Now, some people find that hard to buy when you see numbers like this. We do have that quote now. Take a listen.
We're proud of the ads model we've built. It ensures that people see more useful ads, allows millions of businesses to grow, and enables us to provide a global service that's free for all to use.
This is actually what she just said on the call. So thinking about that in the context of what she told me a couple of weeks ago, Caroline, what do you make of the message from Sandberg?
Yeah, I think the message is one of, at the moment, trying to quell the storm, trying to say that there's business as usual, trying to say that so far the business hasn't been impacted, but they are going to start to be more deliberate about their purpose in which they build the company. I think it is notable that they have been trying to feed back to not only the consumer out there, not only the investor base, but also the politicians, that notably they are spending to improve privacy going forward. They do realize the mistakes they've made, and they are increasing the capital expenditure, the operating expenses. This comes out in the numbers, I think, notably, seeing that we have seen a guidance higher in how much their operating expenses are going to be for this 2018. It's going to be 50 to 60%. They say in terms of growth, that means they're going to be spending more on really trying to securitize the platform, ensure that fake news, that sort of terrorist content, and indeed that our privacy is more secure. So I think that's something to really be digesting through all these numbers, and something that we've got to look out for tomorrow when we see the politicians start to really delve into the CTO, Mike Schroepfer, who's coming over here into the UK, is in front of the MPs tomorrow in the United Kingdom, who are really going to be asking him some tough questions about how the Facebook platform is looking to ensure that we don't see any misuse of the platform when we have elections going forward, particularly when it comes to fake news, particularly when it comes to the Brexit vote here in Europe. And notably, it seems as though Sheryl Sandberg has been going forward trying to say, look, they are trying to be more considered about the way they grow the platform.
She did use the word slow and deliberate when talking about growing the Facebook Messenger platform, and talking about Facebook Messenger, talking about Instagram. They have these other properties that have high potential and don't have as much of an association with Facebook. Yeah,
and in fact, the branding is like completely separate. There's a lot of people who I think are on Instagram and don't realize that it's actually owned by Facebook. The other thing to remember is that some of these properties are still not even being monetized yet. So there's lots more potential for growth. Caroline mentioned elections. One thing they wanted to bring across on the call was also, we're getting ready for 2018. We don't want to see a repeat of 2016, where our platform was used in abusive ways to spread misinformation, to really sway the public with information that was just crap.
He said they will be ready for the midterms, so making a promise there.
They better be, because they're going to be really scrutinized in 2018.
All right, Tom Giles, our senior executive editor, thank you, as well as Caroline Hyde in London. Thank you both. All right, Lending Club has been accused of misleading consumers. The Federal Trade Commission says the company promised no hidden fees, even though it deducted hundreds or even thousands of dollars in hidden upfront fees from loans. Lending Club is also accused of charging consumers even after they paid off loans. The online lender said it is, quote, disappointed with the FTC's lawsuit. Caroline, I want to bring you back in on this. Caroline Hyde in London. What do you make of this coming from the FTC?
Quite fascinating. And in fact, I mean, you heard the response there from Lending Club overall, and they're saying that these are legally and factually unwarranted. But this is a heavy blow. I mean, the FTC that is looking after the consumer is saying they deceived customers. This doesn't help in any way the confidence, therefore, when using these sorts of intermediary products that are a new form of way of getting borrowing. When you or I, a consumer, we can go to investor bases and get a different type of loan via the likes of Lending Club. And they say they took hidden upfront fees. Basically, they took the loan that you asked for was smaller because they took a cut of it. They're saying that they charged borrowers and then they shouldn't have been doing. They took double payments, which forced some to go into their overdraft. And notably, is saying they misled consumers that in fact they would get loan approvals when they knew full well that they wouldn't. These are heavy judgments. The stock fell phenomenally. We saw it down 15%. Look at my Bloomberg. If you type in GP on the Lending Club ticker, you will see that actually if you look at market capitalization, how much this actually has been a torrent of bad news for Lending Club over the last few years. We went from $10 billion valuation back in early 2015 all the way down now to just $1.16 billion. 15% drop today adds to those market cap woes. We've seen the CEO have to leave over a cloud of concerns about the way in which he was selling loans, the way in which he was doing business. They have a new CEO at the helm. But notably, I will lend the other view here. BTIG, one of the analysts on this stock, is saying Lending Club investors have been extremely negative market response to this complaint. They feel it's overblown, and it seems that Lending Club have resolved the past practices and the improper disclosures. So we'll see what the FTC really has to say when it investigates this further.
All right, Caroline Hyde for us in London. Caroline, thanks so much for breaking this down. Of course, not the first setback to hit Lending Club. In 2016, the founder and then CEO Renaud Laplanche resigned amidst an internal investigation. The current CEO, Scott Sanborn, this obviously another setback for him. Coming up, PayPal pushes ahead. It is no longer part of the eBay empire, but it doesn't show signs of slowing down. We'll dig deeper into the company's first quarter results. This is Bloomberg. Advanced Micro Devices forecast sales that suggest it's making progress, winning market share in computer processing from rival Intel. AMD is projecting second quarter revenue of nearly $1.7 billion, while analysts are looking at $1.6 billion. AMD spent last year introducing new designs for laptops, desktops, and server computers, and has begun offering improved updates this year. The stock has jumped by as much as 8% in after-hours trading on this news. Well, as we reported earlier, PayPal reported results that beat analyst estimates in the first quarter. In addition to coming out ahead in revenue, net revenue, and earnings per share, PayPal gave an optimistic forecast for the second quarter, indicating it is holding its own after it split with eBay. Here to tell us all about it, Bloomberg Tech's Julie Verhage. So what were the highlights?
So some of the highlights is this was obviously a very important quarter for PayPal, just because last quarter it was very overshadowed from what was going on with eBay. This is something that a lot of people didn't expect. All of a sudden they were reporting earnings on the exact same day, and that usually doesn't happen. So analysts were kind of wondering, they expected this to continue, and now all of a sudden in 2023, while PayPal will still be a button on the website, before any of the unbranded things saying like if you're paying for Visa, PayPal was the one powering that, and now they're using a startup instead. So I think a lot of analysts were concerned that all of a sudden they were going to start using, like other companies could start doing this as well. So some of the highlights, they beat on revenue. It was $3.69 billion in revenue. The estimate was for $3.59. They added more than 8 million net new active accounts. So now they have roughly 240 million people that are using it every single month. And that was a lot more than analysts had anticipated. And a lot of this has been through Venmo, which just like a lot of people don't know that Facebook owns Instagram, I don't think a lot of people know that PayPal owns Venmo either.
Right. And, what about potential M&A, whether it's PayPal being an acquirer or PayPal getting acquired?
Right. I think the more logical thing that PayPal would tell me is that they're going to acquire something. They have a roughly $6 billion on the balance sheet to acquire different things. It's been a while since they've made an acquisition, too. Obviously, one of the most notable ones is Braintree, which then also had Venmo as well, and that's worked out very well. It's driven a lot of the customer acquisition that the firm has had. So they're not shy in saying that they look at a lot of opportunities, but they've been a little sort of like gun shy actually pulling the trigger and buying something.
And what about Amazon? I mean, the question always comes up, will there be some sort of partnership between Amazon and PayPal? Amazon's obviously getting into its own, increasingly getting into its own sort of banking sector. How will that impact PayPal? And is there hope that for PayPal that Amazon would partner up?
I think PayPal would hope that they're going to power a lot of the transactions on PayPal. Braintree is something that, like when there's payments on Facebook, Braintree is what's powering that, and that's something that PayPal owns. So they do have a lot of partnerships with places like Facebook, even banks like JP Morgan or Bank of America. For instance, like my card with JP Morgan this month, if I buy anything on PayPal using PayPal, I get 5% cash back. And this has been a key strategy for Dan Schulman, the CEO, is just making a lot of partnerships, which is something that before he stepped in, they really shied away from.
So what'll you be watching next quarter?
I'll be watching to see if there's any M&A. That's always something that I sort of keep my eye on because I feel like they are at this point where there's a lot of things out there. I mean, I hear Square sometimes, but Square obviously does have a very high valuation. It's much more than the $6 billion that they have on their balance sheet. But there's a lot of other companies out there. And when I spoke to Dan Schulman after last quarter, he said he's a natural consolidator for the space. So I think it's only a matter of time until that's some big news.
All right, Julie Verhage, thank you so much. Bloomberg Tech. This Thursday, we're going to be digging deeper into PayPal results with CFO John Rainey on Bloomberg Markets. Coming up, while some tech stocks have struggled in 2018, Amazon shares continue to soar more than 20% so far this year. But can the company keep up with sky-high investor expectations when it reports results Thursday? We will discuss next. This is Bloomberg. Amazon is now promising to entertain bored children. It is releasing new kid-focused skills for its Alexa digital assistant next month. Plus, there will be an Echo Dot voice-controlled speaker designed for kids. A new magic word feature will encourage children to say please when asking Alexa questions. Well, from Prime memberships to web services and plans for brick and mortar, there will be a lot to dig into when Amazon reports its first quarter results Thursday. Here to discuss what we can expect, we are joined by Bloomberg Spencer Soper in Seattle. So, Spencer, obviously that key number, 100 million Prime members surpassed, coming out in Jeff Bezos' shareholder letter a couple of weeks ago. What are you going to be watching for in these results?
Yeah, well, with Amazon, you're always looking at how much additional money did they bring in. It's always a lot more. And then how quickly did Bezos spend it? And it's always very quickly. But definitely he was enticing investors with that 100 million Prime number worldwide, indicating that the success we've had in the U.S. we can replicate elsewhere. Prime membership is resonating in other countries, and if we can continue to invest and bear with us while we lose money overseas, but we're just going to keep investing overseas to kind of build the same kind of success in other countries that we've built in the U.S. But the other thing to consider is that there's just a lot of noise around this result, especially with the escalating criticisms from Donald Trump and the tweets. I was just on an earnings call for eBay, and analysts on eBay were asking a lot of questions about postal rates. So this is definitely top of mind. So I imagine that's going to be the kind of thing that analysts will be asking about on the call. Is there any color around, exposure to postal rates? Will they give any indication of what they think that could add in terms of their cost? And then the other thing might be HQ2, if there's any kind of kernels or nuggets or updates about that.
At what point, Spencer, might we hear something about HQ2, and where is the wind blowing?
That's a great question, and they've just indicated that they'll make a decision sometime this year. No real clarity beyond that, and there's been all kinds of parlor games of everyone trying to guess. Well, Bezos was here, and that means this, and all kinds of those sorts of things. But we're still waiting and don't have a precise time frame. But I imagine it will come up on the call, because I think analysts are starting to wonder, like, okay, if they pick a low-cost place like Indianapolis versus a high-cost city like New York, these are things that could weigh on how they model the value of Amazon.
Then, of course, there are all of Amazon's other moonshots, whether it's robots, home robots, Amazon Go, grocery. Which of those do you think we're going to hear the most interesting developments with regards to?
Well, Bezos has been very focused on Alexa, and we even just had, another reveal that you just spoke about the new Echo device geared toward children. So that's definitely near and dear to him, and that seems to be the thing that he's, promoted the most in a lot of their recent quarterly reports. So I think that voice-activated platform, in addition to convincing investors that it's worthwhile to invest money overseas, he wants to convince investors that it's worthwhile to keep hiring and investing in this voice-activated platform, which they see as replacing the touch screen or the computer mouse, or at least supplementing those things.
All right, Spencer Soper for us in Seattle. Thank you so much. Spencer, also still listening into the Facebook earnings call, which is just about wrapping up. Mark Zuckerberg on the call, talking about a big shift that will be happening in how they think about content moderation on the platform. And of course, saying that safety this year will be the main focus. Also saying that they will be ready for the U.S. midterm elections this year to ensure no meddling from state actors. That does it for this edition of Bloomberg Technology. Reminder, we're live streaming on Twitter. Check us out at Technology, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. That's all for now. This is Bloomberg.